Good evening, and thank you for joining me. I think Cookie's here. She's first. Cookie's 45. Hey, this is our last live of Black History Month. I'm so excited that everybody's here. I have a special guest, Sheena Pickett, and she's going to talk a lot about her first-time homebuyer experience. I'm going to take your questions live. So, put your questions in the chat. If you have questions for Sheena, she's going to take some of those too. I used to do more videos. They were called Confidently Closed. I have a Confidently Closed playlist, and it's videos of other first time homebuyer stories. Like I have somebody that was homeless. I have a brain surgeon. I have somebody that used NACA. I have a couple. I have a lot of different ways people, got through and bought their first home. So I really want you guys to take out that. So this is kind of like a live version of Confidently Closed, and it's going to allow us to hear Sheena's story and just, answer all of your questions. So we have 40 people right now on the live, so that's good. And then, so put your questions in. I answer them first come, first served. But we're going to start with Sheena. And I want to show you guys, Sheena is a YouTuber. And I think she became a YouTuber kind of to highlight some of her experiences, or she, started with some of those experiences online. Thank you, Cookie. We have Prince here, and Mimas. Hey, how are you? And Nisi Girl. Hey. And then Miss Demeanor. Thank you. Do you ever cover first time owners for condos? I do. I have at least 2 to 3, don't quote me on their condo videos. So I just want to go over interest rates. FHA is 6.16% and conventional is 6.8%. And those are down from, they're lower. And that could be a good or bad thing, you guys. A lot of they're going lower because of the uncertainty of the economy right now. So that's not a good thing, right? But it is more, it does allow you a little bit more purchasing power, but you have to be careful as to why interest rates are going down, because it could mean negative things for the economy. All right, so let me get started. Go ahead and put your questions in, those of you just coming on, and I'm going to get started. I'm going to put the banner away really quickly. And I want to talk to Sheena. Put your questions in. If you have a question that comes up with Sheena, let's talk about that too. All right, Sheena. Tell them like how, and you're married, so you and your husband, you bought your first home together. How'd you know tell people where you live first. Where do you live?
I live in very small town, rural Georgia. It's called Americus, Georgia. So
Um,
I am the definition of a small town girl.
okay, gotcha. So Americus, Georgia. Would you qualify for USDA in Americus?
Absolutely.
Okay, good. So how'd you decide on what? Okay, you decided you want a house. How'd you decide what loan program? Like, did you know what loan program you should probably try to qualify for?
The only loan program I was familiar with was really like the FHA. That's what my parents used. So that's where I started. And I feel like we went through maybe Quicken Loans or whatever it was at the time. That's how we got started with the loan process.
Okay, and like I said, she's a YouTuber. I'm gonna put her channel in the chat. It's Sheena. So she has a lot of videos that talk about her home buying process. So in watching that video, I know that you didn't use Quicken Loans, and I think Quicken now is Rocket Mortgage.
Okay.
So I think they bought one another or they merged. So why did you decide not to go with Quicken Loans?
Um, it started off great. We told them our credit history. We told them, we had student loans and everything was going okay. They came back and said, well, because of student loans that we needed to have a bigger down payment, because I think we only needed 3.5 for an FHA loan.
All right.
And we thought we were all good. And they was like, is there any way you can add an extra $20,000 for a down payment? And I was like, no. And it was like, is there a parent you can ask? If there was, I wouldn't be. So that's where our journey ended with.
With Quicken Loans, for them to ask you for $20,000 is pretty
Yes,
crazy, because what was your price range of home that you were going for at the time?
from 100,000 to we were thinking maybe 200,000.
Okay, gotcha. So they wanted almost 10% basically, for you to put down. So you left Quicken alone, and then where'd you go next?
After that, I went to like a mortgage broker, I guess, someone local, and they seemed very promising. They pretty much said, hey, you just need like a 640 credit score, and they could do a 3% conventional loan. So that's what we were planning to do, just to have 3% down and try to get our credit score at least up to a 680, even though they said 640. And that was pretty much the second place we were going.
We went okay, and so the 3%, because a lot of people are not aware that conventional loans also have a low down payment option, a 3% option to kind of, compete with FHA. So they have Home Ready and Home Possible. They do have income limits with Home Ready and Home Possible. So, but it's 3% down. So for a $200,000 house, that would be $6,000, right? All right. So why didn't you do that?
Well, right when we were pretty much so close to being approved, COVID happened.
Okay.
And when COVID happened, it's like everyone was freaking out, and they came back and said our credit score needed to be probably a 720, and we needed 6 months of reserves.
Okay. And for those of you that don't know what reserves are, so 6 months is like 6 months of that mortgage payment saved. So if your mortgage payment is going to be $2,000 and you need 6 months, that's going to be $12,000 that they want to see in your account. And sometimes it can be in retirement accounts, that sort of thing, but they want to see it in there. But if your credit score is high enough, they usually a lower reserve requirement or usually a no reserve requirement. So and your husband was on the loan on the mortgage. So how did you get his credit up?
So first we watched your video.
And y'all, let me say real quick. I do have a video. I have 2 or 3 videos that I've done about like buying a house while married. Watch those videos. They don't have a lot of views, but I kind of talk about how I got my husband's credit score up and how, how we kind of budget things. But what did you learn from that video to implement?
Well, the biggest thing was the difference between like your credit FICO and your mortgage FICO scores. Like, if you're using Credit Karma, anything like that, you see your FICO scores, but that's typically like for credit cards. And so, you spoke on not only do they go by your mortgage FICO score, but it is literally the middle number. So, once I learned all that, I was like, oh, I can't go off of these scores. And so I don't know how I found it, but I came across a website called myfico.com. And that really taught me how to aggressively pay down debt, different companies that will let you settle your collections account and remove it from your credit report. And the first thing we did was we opened up a credit card to establish some new credit because we needed to rebuild his credit. And it was Capital One. They were like the easiest one. So we did for 4 months, playing on time. And then after that, he was able to get approved with a big card with Navy Federal. And after that, it was pretty much just saving and replacing, good credit from the bad credit. And it's a slow process, but once you're passionate about it, you're going to have all those apps you're going to be checking, going to figure out how to, when to pay off your credit card balance. It's almost a numbers game, but it definitely works.
Okay. And my FICO is a paid. I think they have a free version like for a little while, but I think to get the full benefit of my FICO, it's probably best for you to get the paid version. So if you're far away from like getting a house, maybe you're like 2 years away, then you probably can use some of the free things. But if you're closer, from everybody I've heard, they say my FICO is like what you need if you're really trying to get your credit up. So how long did it take you to get your credit where it needed to be?
At least probably a year and a half to see like a regular like approval. But for the mortgage we were trying to get, it took almost 2 years.
Okay. So just know that it's not like a overnight process. You have to work on these things. And I bet you your credit now, nobody can mess with it.
Now, at the beginning, of course you have people that can pay to get stuff removed, but it's like you're doing the work you would pay someone to do for
right.
the recovery type thing.
Yeah. And then sometimes with the credit repair people, you don't know who's scamming you, who's not scamming you. Take control of it yourself. People contact me all the time about, oh, can I sponsor your video, credit repair? And I'm never like, nope, nope, nope. Because I don't know how credible you are. A lot of times they want to get you in monthly payment
Yeah.
plans. And if they doing a payment plan, what's their rush to get your credit together? They want to get that payment.
When they remove, sometimes stuff comes back. I think the most heartbreaking story I heard was they thought everything was gone, and when they went all the way to underwriting, those student loans were still there, but you couldn't
Right.
get your credit report.
Right. So yeah, don't trust all those credit repair things. All right. So again, those of you that are just coming on, we are talking. This is our confidently closed kind of talking about somebody who's gone through the process and sharing what she learned from the process. She's also answering questions. What else? We're gonna have fun tonight, y'all. We're gonna answer questions. We are going to tell her story. So we're probably like the first 15 minutes or so to kind of get her where she's to closing, right? So what what did you finally wind up doing? Like what loan program did you finally choose?
For us, we ended up going with Georgia United Credit Union.
Okay.
And I found Georgia United Credit Union because we didn't qualify for USDA. It was available, but because of the income, they take the household income, even though I was not on the loan. So that took us out. We went through Navy Federal. They have a 0 down payment. Our credit score was good enough, but they would not accept his student loan payment.
Okay.
So after that, I was like, well, let me look into some more credit unions. And
Right.
so Georgia has a lot of credit union that has some type of program for no down payment. And I reached out. I just went to Georgia United Credit Union website, looked at the people, the lenders, picked the name, emailed them and said, how do you handle student loan payments? Will you accept a 0 payment? And they said yes. And that's how we ended up going with it. Now, they did require a higher credit score, but that's the bank we end up using.
So, and this is not unique, you guys, to Georgia. A lot of credit unions and small regional banks, so not like Bank of America and Chase and that sort of thing, but smaller banks in your community, a lot of them have 100% financing, no mortgage insurance, loans where you could keep some of the $6,000 you were going to give, right? You could keep that money on hand. And sometimes I would say the interest rate is a little bit higher. But back when, she bought, right, interest rates were 3%. So, it might be 3.5 that she's going to get, right? That's better than waiting 2 years for you to save up, whatever the money is. And then interest rates are higher. So I still have people. I closed Navy Federal maybe about 6 months ago in October, not 6 months, in October. And her interest rate was 6%. No down payment, no closing costs. So it wasn't terrible compared to the average because she was able to get some of it paid, using some of the closing costs to buy down that rate a little bit. So it's definitely an option, and look for that. So you close using credit union, 100% financing, no down payment. But let me show you guys, because this is what got my attention from Sheena's YouTube channel. So we're not going to watch this right now, right? But I'm putting her channel in the chat again because y'all need to watch this video. Don't leave my live, y'all, but y'all need to watch this video because not only does she have a video about how she, her whole process in more detail than we're going into right now, but she also has why the seller refused to give her keys. So sellers, and I always say this, you have earnest money. So if you back out, right, the seller could potentially keep your earnest money. But on your side, you don't have anything, right? That, the seller changes their mind. What do you have? So, and there's something called specific performance where they have to, for the most part, sell that house to you. But a lot of times you have to take them to court in order for them to do it. So tell us a little now because the house is behind you, right? So we do know you're in the house, but tell us a little bit about that process from closing to the time you were able, I guess, to get in, right? Or did they delay the closing because they didn't give you the keys?
Okay, well, our closing time was longer than most people. First, let me get that out of the way. because I think during like after COVID, closing was like 30 days. And this seller requested like a 60-day closing.
Oh.
So, and we were fine with it, honestly. We had put a bid on the home, and we were bid out. And we found out that the person that put a bid on it the first time walked away because they needed to close in 30 days. And this property, the owner was on a conservatorship. So everything had to go through the court. So when we found out we got the house, we get to closing day, we knew ahead of time that the seller would not be there. My husband signed all the papers, and we thought we were about to get the keys, go to Lowe's, and
Did you already have like the U-Haul and everything?
we didn't have the U-Haul, but in my head, I was going to Lowe's to look at paint, appliance, you know.
Everything.
But they said that the seller was refusing to sign, and I really didn't know what she meant by that.
Right. Like, how, what do you mean? Like, I'm buying your house.
And we were told that the seller did not want to sign because she was unaware that we were closing on that day.
All right, so let's leave it at that cliffhanger, because I want them to, I want them to go to your channel and watch that full video and watch it to the end, y'all. But yeah, there's some drama related to that. So not only does Sheena have, it's kind of like a lifestyle channel. She has, her hair is beautiful tonight. So ladies, if y'all want some hair advice or hair stuff, she has that. But she also has kind of some home things as well. So she painted her kitchen. So you see the before and the after. So she has a lot of videos. And what I like about this is, you guys, I know that everybody's looking for new construction. They want everything to be like shiny and new, but you're going to pay for that. So if you're more on, I need something affordable, you may have to get a house that might not be the prettiest to start with, and take your time and do some of the things that you want to do with that house. And you don't have to rush to do it. Secure the house, secure an affordable payment, and then over time, then you could do some of the things to make it, to make it yours, right? So I'm looking at, this is one of Sheena's videos as well. So how long did this process take you to paint these cabinets?
So the kitchen, that took about 3.5 weeks, but I cannot take the credit alone,
Okay.
like the perfect handyman.
Okay.
I just find stuff, I show it to them, and we get in there together. But we were trying to do this before we hosted Thanksgiving, so the pressure was on. But we kept the cabinets. Watching so many YouTube videos, I kind of knew what to look for when buying a home, like an older home. Where I live, people are not building new homes every day. And if the kitchen was already done, we probably wouldn't have been able to afford that house anyway. So I was just looking for a home that had good bones. And I got really lucky because the sellers had replaced like the appliances, the backsplash, and the countertops. But they left me with those granny cabinets. So
Right.
yeah, I just figured out a way to try to keep those cabinets, and we we worked
Right.
to put some on them, to paint them, figured out a color scheme, and that was the finished product. And we save a lot of money with our DIYs because we don't do a lot of different paints throughout the house. So before we moved in, we tried to figure out 2 or 3 colors because it saves money when you're able to bring some old paint back out versus you got to buy new paint for every room.
Okay. Very, very good. So Sheena's gonna be answering your DIY questions, which she can answer, the different things that she's done. But you can watch this video on her channel. You can watch both of her. How many real estate videos about the process do you have? I know you have 2 for sure.
I feel like it's just two. One
Okay.
broke like the different mortgages, and because I didn't see a lot of people talking about it, but I broke down why we did not get approved for like Navy Federal, NACA, like all of these
Oh
different.
yeah, she did NACA too, y'all. So, or she started the NACA process. So it's a
Yeah,
really good video. It's a
yeah.
really good video. So definitely watch that. Then watch why the seller refused to give her the keys. And then watch some of her DIY videos where she's making the house into her home, but still got it at a really good price. So I'm gonna open it up. I did want to say that Sheena touched on student loans. So, a big way that a lot of people are able to qualify for a house is because they don't have their full student loan payment being considered as far as their debt to income ratio. And this is huge, especially if you have student loans, because, sometimes some lenders will take that 0% because you're on that income base. Some people will take a much, some people are paying $10, $100. They're not paying what the full student loan would require you to pay. And then I was seeing this yesterday where the Department of Education takes down key student loan forgiveness and repayment applications. And I would say this, we know there's a lot of stuff going on with the White House and this administration, and the Department of Education that they're trying to get rid of handles like the student loan forgiveness and all of that. I would say for anyone, if you have student loans, significant student loans, and you are not paying the full balance, I want you to only buy a house during this time if they did away with your income-based plan, where they would say now that after this 6 months you're gonna have to make a full payment, and you could not afford that mortgage with that, then you need to hold off for a while until it becomes very, very clear how student loans are going to be looked at. Will there still be forgiveness? Will you still have these income-based payment options? Because I don't think that's very clear right now. There's always something new coming from this administration. Also, if you work for the federal government, you probably know yourself, because Sheena works for the federal government. It's very uncertain, right? So you don't want to be in a situation where and I'm sure some of y'all might, have been house hunting and all that kind of stuff right now. To me, those two things, if your student loans are on income based and you're not sure if these income based payment options are going to stay through this administration, I want you to make sure either you need to buy a much less expensive house, or maybe at some point there'll be some clarity as to, payment options. But this is not a time where, I qualified because my payment was $100 a month, but my actual payment based on my loans, if it came out of, income base, would be $1,000. That's going to be a huge burden on a lot of people. I'm not saying that's going to happen, but I'm saying that it's not guaranteed that some of these programs will stay, right? And then again, federal workers, even if you're not one of those probationary workers where they just fired, because they had less than 2 years on the job and they didn't have to get congressional approval, they're still trying to get congressional approval on other people to, let them go as well. So just be very, very cautious at this time of uncertainty about what you're doing with your money, housing, how you spending your money. I was looking at spring break, and we're supposed to go somewhere this summer. I was like, do we need to go on 2 trips? We probably don't need to go on 2 trips because nobody knows what the economy is going to be. So like spring break is in April. We said it's my 20th wedding anniversary in June. I was like, well, we may not need to do both, right? So be really thinking, because we don't know what this economy is going to look like for any of us, So, all right. So now I'm going to take your questions. Sheena, did you want to say anything else about your channel?
Just come to it. Stop by.
All right, please do. Yeah, she has some really great content. I'm posting it again, and I'll try to put it on the screen too. All right, so now we're taking questions until 8:00. So put the questions in. This is her YouTube channel. You can copy and paste that. Don't leave here to go there, but watch it right after this. I'm gonna make her start going live once a week, so she can answer your questions. All right, Chester, first time watching live from New Jersey. Welcome. Welcome, Shelby. Let's see. Let's see. Our first question. Let's get alkaline. Can I do rentals with a fix and flip LLC? You should be able to. Basically, the way I'm reading this is, can I just buy it with my business? You can, for sure. And a lot of professional investors say that for almost every house, you might need a LLC to just get rid of some of that, the risk, right, involved if something happens on that property or happens with that property. So the answer is yes. I just don't know what other questions you may have in regards to that. But you can buy rental property with your LLC. Or you can buy a rental property and then put it in an LLC. You can do that as well. But I think the misconception that a lot of people have, because it's so out there that, oh, you buy this with buy a car with your business credit, buy a house with your business credit, do everything with your business credit. At some point, a lot of people use their personal credit in order to start building business credit, because if your business is not turning a profit, how do they know that you're going to pay them? Like, your business is almost collateral for whatever you're buying. So, it's possible, but you have to show profit. You have to show, that you have some assets in that business. You can't just say, oh, I paid, $200 for LLC. Now I want to go buy a $500,000 house with nothing behind it, right? So you do still have to have that behind whatever you're doing. All right, Nisi girl, I think she answered this, but how long, Sheena, altogether did it tell you from like the start to the finish till you close on your house?
When we found the house, that took maybe 2.5 months, but from the time we were approved, that was probably 6 months from the time we got a pre-approval from our lender.
Okay. You said 2.5 months? No.
About 6 months as far as house hunting,
loans, everything, about 6 months. Okay, that's good.
All
right,
and so houses were flying off the market.
Right. Elle is helping me in the chat. She has my video on married and buying a home. I talk about how my husband owed the IRS, y'all. Y'all need to watch that too. Sheena first, then go back and watch that. All right. Hey, all right. So Curly Girl Bree says, I'm dealing with this right now. My mortgage counselor with NACA is saying my zero student loan balance with IDR won't suffice. And it really, when you are using NACA, you're getting a conventional Bank of America mortgage. So whatever would fall under that conventional, and I don't know, conventional is either Freddie Mac or Fannie Mae. Do you know which one it is? And Fannie Mae and Freddie Mac, I was asking you, Sheena, I don't know if you know, but Fannie Mae looks at your credit, looks at your student loans one way, and Freddie Mac looks at your student loans another way. So I do have a video that tells for each way how that loan type looks at your student loans, but that's probably what it is. And like what Sheena was saying, the other lender said, oh, we will take the zero, dollar. So it could be a Freddie Fannie thing. So look at that. But it's always, don't just, because you got denied one place, I think Sheena's a good example of this. Don't think that, oh, I'm just done, right? She was like, nope, Quicken not working. I'm moving from Quicken. Navy Federal, NACA, like she was going to figure it out. And sometimes you do have to figure it out. Let me ask you this. How many loan applications did you do within that 6 months?
Oh my goodness. Probably at least 7 or 8.
Wow. So, and when I told you her credit wasn't that bad, she still was able to buy a house because y'all so
scared. I did all of the applications within a set,
time.
Within a set time period. So it won't credit so hard.
So it wasn't that bad. Okay. But yeah, so don't be scared because a lot of y'all, I don't want them to pull my credit. I don't want all those hard credit pulls. Do it within a short amount of time. She's proof that it won't, and because she was still trying to build her credit during that time, but it did impact her, where she wasn't able to qualify. Her credit was still building at that time. All right, so let's answer the next question. Infinity Star. We are buying a home. We are in the due diligence stage, and the seller has decided to terminate the contract. Checked listing this morning and noticed that is no longer pending. Can he do this? So my answer, I don't know what state you're in. So I'm going to answer it generally because I'm not a lawyer. But in general, I would say no, because even though you're still in the due diligence period, he's under contract with you, right? So he can't just terminate the contract he can't unilaterally just on his side say, I want out of this contract. That's not how contracts work. However, because you're still in due diligence, usually during this time, you negotiate things. He could just say, I'm not doing anything. I'm not doing it. He could just, the seller. So say you do your inspections during this time and they're like, oh, the water heater's bad. This is bad. Or you're saying, I want these things done. Right. And he could just say, nope, not doing it and make you terminate. Right. Because you're like, okay, they're not willing to do anything. You may terminate, but I would, before you do anything, if you still want the house, you need to talk to your agent first. Hopefully you have an agent. Talk to your agent, know your rights in your state. And the second thing I want you to do is talk to a lawyer and say, hey, what are my rights? Here's my contract. What are my rights? Because the same way I was talking about, you don't have earnest money from them, right? But you paid for maybe your inspection, wasted your time on this house. If you don't want to push him to specific performance, you could say, hey, I'll let you out of this contract for this amount of money. I want my inspection back. I want this back. I want that back. If not, I'm going to take you to our close on this house. I mean, that's something you could do. Again, I'm not a lawyer, but I would, at least try to get if I'm not going to take it to closing, right? If I'm not going to go there because depending on how the inspection looks, I may not, he may not be willing to negotiate anymore, then I might, work on some other way I'm going to get something out of it, because I don't want to waste my money either. On inspection or whatever else you did. I don't want to, just talk to your agent and then talk to a lawyer, because in general, he cannot do it. But if you were trying to get some more out of him or repairs or anything like that, he could just say no to it as well. All right. I hope that answered your question. And I do have a video about when the seller refuses to sell, and it talks about specific performance. And because let's go back to you, Sheena. So when they didn't come to closing, what did your agent tell you at the time?
That they would probably have it cleared up by lunchtime. So they were pretty, like, I know. And we believed them.
Right.
So we were like, okay, let's just go grab a bite to eat together. We can still go to Lowe's, walk around. But the clock kept on ticking. And
So how long? I still want them to watch the video to find out what happened. But how long was it from the closing to the time you actually got the keys?
Oh, it was just over 24 hours.
24 hours. Okay. So it took the whole day for it actually to go.
Yeah, my agent, she had to assert herself. And
right. Probably like what I was saying, like, hey, y'all gonna sell this house or you're gonna do something. Because nobody, and usually you guys, it doesn't get to that point, because at that point there'll be lawyers involved, and usually the lawyer can just call the buyers and say, hey, in this state, this is how this generally works. And they, they get scared off by that a little bit. So that's why I was saying, go to a lawyer, and your agent should, because in in some states, you have to close with a closing attorney. And so they should have attorneys that they could call, get advice from, and know how things work without you necessarily paying somebody. Like there are attorneys that I could email and say, hey, this is what I'm going through, that are associated with my brokerage. Could you help me on this? Right. So, reach back out. Hopefully you have an agent, reach back out to that agent. They should be able to help you navigate it. And then, if that's not working out, then go to a lawyer and have, just do a consultation with a lawyer, a real estate attorney, and they should be able to tell you what your rights are in that state. All right. Good question. Mr. Demeter says, closing scares me. Never bought a home yet. Now, in general, closing everything has already been negotiated. Just a matter of everybody coming to sign. So it is unusual that somebody just doesn't show up or they don't sign. So, it'll be fine. You'll be fine. I promise you. This is like a one-off. This is a rare occurrence. All right, you guys. Sharna, it's okay. Hello. You're not late. And Grace said, seller will not give the buyer the keys, specific performance. Yes. Mr. Meter says, is it true that huge investor companies are dumping their inventory at big discounts now? Lots of deals, but mega investor builders. I think a lot of investors I think in all those real estate channels, when like, oh, everything's crashing. Everybody's, I don't think everybody's doing that. I think there are some investors are like, let me cash out because of the uncertainty again of what's happening with the markets in general. Whether it's good or bad, you guys, with Donald Trump administration, right? We're not getting into whether it's good or bad. It is chaotic. I think everybody could agree that there is chaos with it. And when you have chaos in financial markets, that's never good. because people can't plan. Like even businesses, they don't know if they're going to have tariffs or not have tariffs. They don't. So when you don't know about something, the same way I was telling you guys, you may not know about your student loans, hold off, right? Because there's some uncertainty there. Businesses are doing the same thing, and investors will do the same thing. They don't want to be holding on to all these houses, because what was everybody projecting in 2025? That rates would come down. Now they haven't come down that much, definitely not drastically. And most people are saying they're going to stay around where this is right now. So, if that's going to happen, it would be for investors to say, hey, let me see if I can, get rid of some of this inventory, because what was going to happen didn't happen. So I think anytime with uncertainty, that becomes the case. So just, it's not like the sky is falling necessarily, but it's very much when I said in my last video, prepare, protect, and if you can, profit, because people will be making money off of everything that Donald Trump does, right? So if there are opportunities for you to make money with some of the things that he's doing, then do it. But a big part of what you need to do is prepare. Like, see something coming and don't wait for it to hit you. Say, okay, this might happen. Am I ready for it? And then protect as much as you can, as much stuff that you've gained, or that you have, try to protect it. All right, let's get to some more questions. What has been your last project, Sheena, that you're doing in your home, or your most recent project?
Yeah, it was the kitchen. That was the last one.
That was the last one. So over this Thanksgiving.
Yeah.
Okay, what else have you done in the home? You just tell us while I'm looking at the same next question.
Well, the first thing we did before we moved in was we just painted throughout the house. And before the kitchen, this room that I'm in was covered with wallpaper, dated wallpaper, not the new stuff. There was wallpaper on the switch plates, the outlets, the curtains matched the sofa. Like, it brings back memories to probably a more simpler lifetime. But yeah, it was just straight out the 60s. So
right. What year was your home built? In the 60s?
I think either late 1950s or early 60s. Yes.
Okay.
Everything is original. There was only one owner, which honestly we were happy about. He was very proud of his home.
Okay, gotcha. All right, so Angel says, are FHA loans still available considering the cuts? Yes. FHA, I would think FHA loans are something that would have to be they would get rid of only by Congress. It couldn't be like an executive order, no more FHA loans. So they are still there. They are still 3.5% down. So it is still an option. VA loans are still available because that's another government-backed product. USDA loans are still available because that's still a government product. So everything's a government product except conventional. Conventional is more of a private product that does have it's overseen by the government, right? And even one of the things Donald Trump said that he wanted to separate the government from conventional loans. So that's something that could be happening as well, where they won't have as much regulation with conventional. And the reason they put the regulation is because during the financial crisis, when everybody was foreclosing, they didn't have those safeguards with conventional that they had with the other loans. So yeah, so I don't think FHA loans are not going anywhere. I don't know if there'll be changes to FHA loans because, now the administration is putting in all of their people. Let me tell you some of the things that under the Biden administration, how FHA changed a little bit. It used to be that FHA loans were 1% as far as student loans. It was 1% of the loan balance. So if you owed $100,000 in your debt to income ratio, FHA had to use $1,000. So that was one. And over the Biden administration, they cut that to 0.5% because they were trying, with all the rise in prices, they were trying to make it more affordable. So instead of 1%, they went down to 0.5%. Also, the mortgage insurance premium now is lower than it used to be as well. So those are two things that I can think of right now. So the same way that Biden did things to FHA loans, I'm sure Trump can do things to FHA loans to change them, but the actual loan product itself should still be there. All right, good question. All right, we could talk about this. We'll talk about the old way and the new way, maybe, because you You did this a while ago. Degenerate Learner says, as a buyer, how do or did you discuss commission fees with your agent? So I'll tell you how it works now. But when you bought what in 2021, right? How was it? How did your agent get paid?
Through the commission from the profit of the home.
Profit of the home. So the seller.
Profit, yes.
Yeah, seller's profit. And that's how typically it was done. Now, this year, August, I believe 17th of 2024, it changed to the seller. Probably when she bought that house, they advertised, we're offering a percentage. Say they were offering 3%. Their Sheena's agent would have seen that this property is offering me 3%. Now you can no longer advertise that. So now when I'm sitting down with a client, before I didn't have to talk about it as much because I knew for every house that we were seeing how much they were offering me specifically. Now it's no longer allowed to be advertised. So I have to tell them, hey, this is my fee. I will try to get it paid by the seller. If the seller is offering something, I'll try to put it in the offer, but it's not guaranteed. If we can't get it from the seller, I may have to get it from you depending on what happens. And I hate talking about uncertainty. That's a lot of uncertainty for a first-time home buyer. Whether I'm going to have to pay you directly or whether the seller's going to pay. So usually we talk it through. I go over what the average people are getting, who's still offering it. Your agent can call ahead of time and see what's being offered if they're willing to share it. So there's a lot of ways to go around it, but I kind of just tell my clients to trust me and let's go through the process together. If, and usually I have them sign for 3%, but if a house is offering 2.5, I'm like, I need my 0.5%. So you really need to find somebody that does, that's not, I don't want to say this. What I want to say. You want to find an agent that's a little bit flexible, right? That's willing to work with you. And so, because I wouldn't want to know, a lot of my first time home buyers, they're not buying, $1 million homes. They're buying 350, 300, the one I'm closing Thursday, 250, right? So for me to say, okay, I need you to have your down payment ready. I need you to have your closing costs ready. And I need you to have my 3% ready. That's not doable for a lot of people. So I try to have it where I'm not working for free, but I'm still a little bit flexible with you. If you buy my masterclass, I talk about that in there. You should buy my masterclass. I'm throw that out there. All right, good question. I think Degenerate, you did get my masterclass, if I remember correctly. You could have more information on that. I go over the contract that I go over with my clients. All right. Let's see, NACA. I fired NACA. NACA. I went with another lender and I'm using USDA with a second no interest down lien. NACA was messing with my emotions. NACA is a process, y'all. So if you have like a year or so, go with NACA. If you have to close in 3 months, even though some people do it, but it's not typical, then you probably don't want to go with NACA. But thank you for sharing. I just don't want people try it because sometimes NACA is like amazing for people. And sometimes it's like this. She's like, NACA was messing with my emotions. I had to get out. But USDA is a good, alternative to NACA. All right. Thank you. All right. So Miss Hill, do you have a video regarding owing taxes and buying a house? I bought a home and I owe taxes. Are we talking about property taxes or like IRS taxes? I have a video about property taxes. I don't really have that many videos about IRS taxes. So tell me which one and I'll try to get to it so I can answer it more specifically. Property taxes or IRS taxes. Tell me, Sheena, have your taxes and insurance gone up since you closed?
Yes.
Okay. Was it like shocking or was it like doable?
This last one was a bit more shocking because every other year is like maybe $30 or something like that. And then I expect, maybe a check the next year.
Like a refund check
Yeah.
from your escrow? Okay.
But that was something we had in mind when we were looking at how much he was approved for and not buying at the top of our the top of,
Pre-approval.
yeah, and if we could manage the home with just one income. So we didn't buy at the top, and a lot of the homes we did like and we could afford, but the property taxes put us over, our price range. So
Right.
that's just something to keep in mind.
Yeah. Very, very good advice. Very good advice. All right. All right. Let me see. All right, JT, thank you for doing these. You're super informative and your videos are amazing. Thank you. Thank you. And a lot of my videos, you guys, that I do is from like questions that people ask me. I'm like, oh, I need to do a video about that. I need to do a video about this. So Sheena is a good example of, somebody that put some, looked at this and did her research, even the DIY, went on YouTube to try to figure it out. We're all learning from one another as to, how to do things, the best way. So we don't, because we've never done it before. We need to know. And even Kashina said her parents had done it one way. Like my mom did an FHA loan too. And she was like, what? My mom said, I got one of those, the single mom loans. I was like, Mommy, they don't have no single mom loans. She was like, well, they have something for single moms. I was like, it wasn't like, she didn't even say FHA. She was like, yeah, she's like, it's good for single moms. So somebody must have told her, well, this loan would be good for you. And then that just stuck in her mind. So sometimes we're not using even the right vocabulary, right? She's like, hey, I got a loan for you. My mother did not get a loan for single moms, and there's not a loan available for single moms. It might have been the best loan for her. Like you said, she only had one income. It was probably, a low down payment. It was the best loan for her at the time. But, just knowing that vocabulary, and because once people know what you want, even lenders and agents, once they know that what you're talking about, they speak to you differently.
Absolutely.
Right. When you start hitting them with, well, are there any points on this loan? Then
Yes.
they start talking to you differently, right? You want to speak on that?
Well, I completely agree. Even though we didn't have a great experience with Quicken Loans, that's how we got our agent, through the referral they gave us, and we actually stayed with that agent. But she was very impressed with the whole conventional loans, and she was like, I didn't realize there were conventional loans that had no down payment. So they do talk to you, I feel like, more freely when they know you know something.
Right. So y'all need to make sure you come with your good questions, all of that. Miss Amina says, I love your guest creativity. Can't wait to watch her channel. Yes, yes, definitely, definitely. What else? What do you have coming up, Sheena, on your channel? Do you have anything that you're planning on?
So I feel like there'll be quick things. It's just redoing like my mantle on my fireplace, resanding it down. And there was a huge mirror left in the garage from the sellers. So I want to frame it and put it by my fireplace. So those, I feel like there would be two easy ones. But my next big one will definitely be the bathroom. And let me just tell you, you just never know how things work. I was at work and a girl who is on post, she came up and grabbed me and asked if I would take a gift from her. And it was like countertops that would go in the bathroom. She saw a video of me cleaning my bathroom and she renovated her home. But first she wanted to make sure I wasn't like offended.
Right. Yeah.
And I wasn't. So it's just crazy. My YouTube channel came up on her algorithm. And so, yeah, the next big project will be our bathroom.
Oh, that's great. Let's talk about this. So you do those clean with me videos too?
I do.
Yeah. So if y'all like those videos, the clean with me and all of that, she has some of those too. So let me put her channel in the chat again, because I want y'all to go there next. All right. So Benz says, my agent was a dual agent. Is that not recommended? Double dipping. I don't recommend it at all, because at no point, it depends on every state's a little bit different. Like my broker, Georgia allows dual agency. It's not against the law, but my broker does not allow dual agency at our brokerage. And this is the reason. You cannot have two clients. You cannot do everything in if you're representing a seller and you're representing a buyer, you can't do both things in their best interest. Like the whole thing of being having a client is, I'm going to do everything, negotiations, your negotiations. I'm going to do I'm trying to think what else, your offer. I'm going to do everything in your best interest because I'm very clear that I represent you. Now, when you're doing, so we do allow, we call it to work both sides of the transaction, but my broker says one person can be your client, the other person has to be your customer. And the customer, you don't have as much obligation to, right? I don't have to tell a customer, you need to get a home inspection on this house. I don't have to tell my customer that, this is on a septic tank. You might need to get a septic clearance letter on this house because they're just a customer. They're not my client. And telling that customer that you should get a home inspection is against my seller's best interest. What if they weren't going to get one? Why would I recommend that they get one, right? Or if it's on a septic tank, I can disclose it's on a septic tank, but I don't have to tell them you may need to get a septic clearance letter to make sure this septic tank is working. Because again, that's against my seller's best interest, right? So I like it very separate, that you are somebody's client and they're not on the other side as well. Sometimes it works. And, if everybody's really on the same page, maybe the seller, that sort of thing, maybe that can work. But in general, I want you to be represented by someone that's separate and has no obligation to the other side. That's just my 2 cents. Because imagine in this instance where, the seller did not come to sign and they said, imagine if she had the same agent trying to work both sides of that. That would be, I'm sure the seller's agent was like, you need to close. They can sue you, that sort of thing.
Yep.
Yeah. So it's just really important that you have somebody that's truly representing you. All right. So we have about 10 more minutes on the live. We're going to be here till 8:00. We have 189 of you on the live. If you're just getting here, you're late. But Sheena we did a confidently close, so kind of talking about her first time home buyer experience. She also has a YouTube channel. Let me go through that. Again, let me put that down. We also talked about student loans. I'm not going to go over this right now, but you can watch the replay. She does some DIY videos. Also, she talked about her experience and, so she has 2 really, really good videos you should watch as a first-time home buyer, because again, she goes over the process and why she picked what loan types and why she wasn't approved, because she was denied by at least 2 to 3 lenders, and how, she went to the next lender, like how she navigated that. And then what happened when the seller refused to close. All right. So I'm going to put that back down. All right, let's try to get through as many questions as possible. Sheena, let's see what else we have. All right. Lisa said, that is a first. NACA is so good. So like I said, if we want to just to battle NACA pros and cons, we probably could be here all night. Yeah. Either people hate NACA or people love NACA, right? There are people who have 0.7, I saw online, 0.75%, like less than 1% interest rates with NACA. Yes. Like you can't beat that anywhere, y'all. So it could have been like hard getting there, but once you get it, you're like, oh, this was good, right? So you have to everything. It's one of those things. What do you say? I can't even think of the saying, like it's too good to be true, or some things you have to work for. You have to work for NACA, but if you're able to make it through the process, it's really worth it.
There's gonna be a catch to it. So
okay, gotcha. Yeah, gonna be something. All right. So Sobin says he owes the IRS. Again, I'm not an attorney, but the IRS, so number one, you can be on a payment plan with the IRS. So that's what I would probably, if you don't have the money to pay it, number one, have an accountant look at your taxes, make sure you really owe what you owe. And so that's probably my first thing that I would do. But then if you truly owe the money, then, well, they done fired like half the IRS workers. No, I'm just playing. But you want to try to get on a payment plan, possibly with the IRS, because a lot of people buy homes on payment plans. Like they owe the IRS, and as long as they're on a payment plan, they can still buy a house. So I would say, if you're worried about them coming to get your house or foreclosing on your house, that sort of thing, that typically doesn't happen if you're, made arrangements to pay them. Also, the most they usually would do, I think, but don't quote me on this, is put a lien on your house. So to make sure that they get paid. So do all of that research, go to your accountant, make sure you still owe it, make sure it's legitimate. And then if you truly do owe it, try to get on a payment plan. But you should be fine as far as if you're worried about like them coming to foreclose on you and that sort of thing, that takes a long time. And if you're on a payment plan, that won't happen. Now you might owe $2 million. I have no idea. Then you need to get a lawyer. Like, and you need to, because then they probably will start repossessing things. I don't know. I'm not laughing at your situation, but if it's not a lot of money, then, or like a, you know, when I'm saying like hundreds of thousands, that sort of thing, and a payment plan is, you know, something that you could still pay, then that's probably your best bet. When I was talking about my husband owing the IRS, if that's where this came from, they took our whole like refund check. And this was like our first year being married. So watch that video.
Yeah.
I was calling my mama and everything. I was like, they took our check because I already had that check spent, y'all. And this is my first time doing like married filing jointly. And I was like, and you don't get no check in the mail, or you don't get, I was waiting on the direct deposit, I think. And we got a letter in the mail saying, your balance has been applied. I was like, who is this? He's like, your balance has been applied. I was like, who is this person that I married? I was like, I don't owe anything. Give me my money. Right. But watch that whole video. All right. Let's see. Who else do I want to? Okay. We're going to take 5 more questions. I'm trying to get through. All right. Let's see. Yes. Said Rocket Mortgage, I believe, is now Quicken Loans. They merged. I don't know if one bought the other, but they might have merged. All right. Let's see. Let's see. All right, Chester. I'm in New Jersey. I would like to be a first-time buyer. What questions should I be asking? Well, number one, you need to watch all my videos. But, you know, pretty much I have all the first-time home buyer videos. Watch, if you're just joining, I see that you might have gotten on late. This is Sheena, and she detailed her first-time home buying experience. And so I would watch that as well. But I think if you want to buy a house, I think the first thing you need to do is say for yourself, what would be a reasonable amount before you get pre-approved, right? Because the pre-approval is probably going to be higher than what you can really afford. I want you to sit down and say, what would be a comfortable amount of a mortgage payment for me to pay? I think you should start there. And then make sure you look at your credit. Like some of my videos say, okay, you need to have at least like a 620 could get you qualified for most things. But what Sheena said, if you don't want to have reserves and all of those things, you want to get higher. So, where does your credit need to be? I would say, 680, something a little bit higher on the sixes, you should be fine, even though you can qualify on the lower end. And then, so your budget, how much you qualify for, and then just get a pre-approved. So then you can find out. I have a good video with Kevin. There was another live video. We went over the entire pre-approval process and, in great detail. Because I'm thinking, just get pre-approved, because some people sit and they're so scared to even get pre-approved that a lot of y'all could have bought houses 3 or 4 years ago, but y'all was sitting around, oh, the market's going to crash. And then it never happened. So that's the first thing that I would do. Like, sit down with yourself and say, what is reasonable for me to, pay for a mortgage? How much money do you have saved? I say try to start saving 7%, because let's assume that the seller doesn't pay your closing costs or that sort of thing. More sellers are paying closing costs, but if it's $100,000 house, try to start saving 7,000, 200,000, 14,000, and then see, okay, it's going to take me, if you're thinking it's going to take me 3 years to save $14,000 or, $21,000, then start looking at down payment assistance programs, like what Sheena was saying, 100% financing options, or USDA, or, some other ways that you can get that number lower. Because there are people buying with no money out of pocket, but you want to have as many options as possible and start educating yourself on that. Sheena, what would you say? Like, what was some of the first questions that you asked yourself or your husband that you knew that you were ready?
Well, I did like everyone else. I went on Zillow, picked out a few homes that were out of my price range, and then I was like, okay, let me settle down. And then they'll tell you what you should be able to afford. But like you said, a lot of times that number is higher than what you really should be doing. So we just looked at what we felt comfortable with paying and kind of worked backwards from there. Even though, it was a no down payment loan, we still had to show reserves because you're not putting anything down. So they need to make sure that you are legit. Like your score has to be higher, your reserves have to be there. We were lucky where the seller was able to pay some of our closing costs. I think our mortgage allowed maybe 3%, up to 3% for seller costs. And after that, after we closed, we still had that money in the bank, which stuff will happen after you close on your home. I want to say 2 months later, I didn't get paid. That was a mishap. so, so thank goodness that money, those reserves were there so we could just keep on going. But I don't want people to hear no down payment means you won't spend any money.
Right. You still gonna need that money. You got inspections, like you said, savings, all of that. All
Right.
right. So I said 5 questions. Let me see. That was one. Let's see. Infinity Star says, what if the seller moves into the home before closing? What should we do? If you own the house, let me try to say back in the home. If you close on a house and the seller still is there, okay, let's talk about how this doesn't happen. Before you close, you want to do a walkthrough of that house, make sure they're fully moved out, right? You don't want to close if you walk through a house and the seller still has their stuff there. So say your closing is at 10 a.m. You need to go to that house. I mean, ideally go the day before, but go to that house. If there's been times when we do a walkthrough at 7 o'clock and they still have stuff in the garage or they still have stuff in the house. We'll go back in the morning of closing to make sure they're fully out. So we're not closing at a house that's still occupied, right? Now, it could be that they moved out, you went to the closing, everything was gone, and like what you're saying to me is they moved back in the house. So I guess legally that's still their house because you haven't closed on it yet, but that whole specific performance is back there, right? And you would have to have them do specific performance, sue them basically. If you do close and then they're still in the house, then a lot of states you have to evict them. That's a whole nother process because, you know, now they're like a tenant kind of in your house. But hopefully this doesn't happen. But what you definitely need to make sure you're doing walkthroughs of the property prior to closing and, to make sure everybody's out. Especially if people are buying homes that are tenant occupied and that sort of thing, definitely make sure those people are out, right? Okay, let's see what else. Cree says, when doing multiple credit checks for a mortgage, should I do NACA last since their process is so lengthy? You're not gonna be able to even do your NACA application until you go through counseling. Like you're not gonna get to that point, I don't think, with NACA. So I wouldn't say do NACA last because you need to go ahead and get started on NACA.
Yes.
So speak on this, I guess, Sheena, because you were doing NACA and still applying at the same time, right?
Yes. But like you said, the time it was going to take too long. But the big thing with NAFTA, technically they don't use a FICO score. They look at your credit history, and if you go through the process with all the counseling, they package you so that you are ready. So that's
Yeah. So you don't start NACA with a loan application necessarily. They do. They don't say you have to have. There's no minimum credit score, but they check your credit, right? They check what's on your credit. And they may ask you to pay off something so it's a different process. So don't wait to the last minute to do NACA by any means. Get on that now, right? And then what's going to happen, either you're going to be in it and be like, okay, this is doable, I can see this working, or you're going to get in it and say, this ain't going to work for me. I need to be in my home, because they're going to make you save a certain amount of money. They're going to make sure that you did whatever they asked you to do. And then for some people that have, their finances really together, they probably can get through NACA like in 2 months. But for other people, if they give you something to work on, they'll say, well, next month, let me see what you worked on this. Let me see you work. And then the counselor might quit. And you got,
all right.
did you have a counselor quit?
I did not. I had a great counselor, but those stories is what I was expecting. But my counselor was great. And like you said, if your credit is already, if you're already on the right track, it's good. But they do like to see you save up. I feel like it may be 4 months with like what your mortgage will be. And
Mm-hmm.
that's another 3-4 months. Unless your rent is high, way higher than your mortgage, then you're gonna have to set some months up of like showing you're consistent with your payments.
Right. That you're gonna have like a pretend, like, oh, your mortgage is gonna be $2,000, and if you paying $800 for rent, that means you need to save $1,200 on top of that $800. And they're gonna say, look, give me a copy of your bank statement showing me where you have this money saved. So that's the help counseling part. So yeah, I wouldn't, to answer your question, don't wait on NACA last. NACA should be first. Like if you're considering NACA, start with that, because more than likely you're probably going to say, oh, this is gonna work for me or it's not. And then you might go and say, let me see if FHA works or USDA works for me better, that sort of thing.
Mm-hmm.
All right. Let me see. All right. This is question number, that was 2. This number 3. It says, Grace, does this usually happen? Let's say with Remax, details on a home. It mentions everything except selling as is. It mentions everything except selling as is. My realtor saw it on her MLS. Is that false advertisement? I don't know if I understand the question, but if it's being advertised as it's being sold as is, to me, what that tells me as an agent is that the buyer doesn't want to fix anything before closing. It doesn't mean that you can't get credits for some of the things that are wrong with the home. So let me give you an example. So this, I don't know. There's paint. The whole house is painted red, right? And they're like, we're selling as is, meaning we're not going to paint this house a neutral color before you move in. But I could say, hey, I got a quote how to paint this house, agreeable gray, and it's $3,000. I need a credit, or I need you to pay at least $3,000 of my closing costs, or I need you to pay my contractor at closing out of your proceeds to get my house painted. So they're not saying they're not going to do anything, but that doesn't mean that they can't use the equity in their home to get you some of the things that you're looking for in that house, be it credit toward your closing. So that money goes, you have more money in your pocket to do some of those things. Or some lenders will allow that from their proceeds, they can pay your contractors to do some of those things. So that's what as is means. So I'm not sure if it's false advertising. If, you make an offer and then they tell you it's as is, they just don't want to fix anything. So I don't think it's necessarily false advertising. All right, that was question number 4. Crystal, I'm approved for a VA loan. I'm in a rental until July. When should I start actively looking to close by July? I would say 3 to 4 months. So you're right in that timeline right now to me, Crystal, because you got March, April, May, June, right? March, April, May, June, July is right here. So yeah, I would start at least by next month. What do you think? I know it took you 6 months, but you were kind of in the heat of
Yeah.
the big
Oh,
sellers market. But
yeah. That sounds about.
and the lower your budget, the longer you need. Let me say that. Like
Yes.
if you qualify for 700,000, you're gonna find a house. You can find a house probably in the next couple of months, a month or two. So if you're qualified for 197, 215,
Mm-hmm.
275, you need to start now, because
Yeah.
a move-in ready home at that price point is going to be a needle in the haystack, and it might take you a while to find that. Okay, so start looking now. And when I say lower price point, if the average in your city is 400,000 and you're approved for a lot lower than that, that means you can just start longer, because there won't be enough homes at your price point. Okay. All right. Thank you, Crystal. All right, we got one more. Yeah. Let me go through. All right, let's let this be our last question. Okay. And then before we finish, and I'm gonna see if Elle has a question because she did a super chat. Elle, all right, I'll do Elle's super chat question too. All right, Jamie, I'm considering a career change after getting approved and buying a house. You already bought a house. Let me see. Let me read it one more time. I'm considering a career change after getting approved and buying a house. And I'm wondering, will changing my job later be an issue? After you close, do whatever you want. Yeah, they're not going to come back and say, oh, you changed your job, you can't get that mortgage. Is that how you're understanding it, Sheena? She already closed?
Yeah, that's what I'm thinking, unless she's saying she's already approved and she hasn't actually found her home, but it's a possibility she may change careers in the process. But
Okay. So let me say, if you're under contract and you're, don't change your job. This is for everybody. Do not, do not, do not change your job. I don't care if your job paying 50,000, this job paying 100,000. I mean, that you still might take that job, but it may delay the process. Let me give you a couple of examples. So I had a client that was approved, and his job offered him more money, but it was a 1099. He didn't talk to me, he just took the job. And so in the 1099 job, it was with the same employer, but they were, I guess, changing some like full-time workers, W-2 workers into contract workers. And so it was more money for him, but he was like, oh yeah, I can get approved for more now. He was no longer approved because he went from a W-2, like 2 or more years with his W-2 job, to, in a lender's mind, you're self-employed and they can get rid of you at any time. So he was no longer approved. So definitely, if you're in the middle of a transaction, don't switch jobs. Tell them I'm about to buy a house. Like if you're under contract, stuff like that, don't change it. It's going to be too much. But if you are just, you have 2 years on one job, you're moving to another job, as long as it's the same kind of employment, like W-2 to W-2, no, don't go from a W-2 worker to a Uber. Like that's not going to work. I don't care if you're making more money with Uber, they're not going to get approved. So just be really cautious. I did have one person in all my time change their job while we were under contract with a house, but it was like a very lateral move. Like she was a veterinarian and she's moving from like one veterinary practice to another veterinary practice, company. And she didn't have any issues and she was under contract. But I would say in general, definitely check with your agent before you do any job. No, definitely your lender. Check with your lender before you do any kind of job changes if you're planning on buying a house, because it could be not what you expected, for sure. All right, Jamie, I'm going to answer the super chat next. And that was with L. Let me see, L, I got to pull your thing up. All right. L says, thank you for the super chat. Question: does NACA find your home, or does NACA finance the home you find? Okay, good questions. Let's tackle both of them. So NACA does not find your home. That's number one. So let's just go over the NACA process real quick. And you could probably, because I've never actually been on the buyer side of NACA, but NACA is a nonprofit organization. Okay, they don't actually loan you anything. They partner with Bank of America to offer this specific loan product to help first-time home buyers. Well, you don't even have to be a first-time home buyer. You can't currently own a home with NACA. So you don't have to be a first-time home buyer, but you can't currently own a house. And they want it to be owner occupied. So it's not for investors. However, you can get a multifamily with NACA. So that is an option. So you can buy any house. There are not NACA houses versus regular houses or anything like that. The only thing is, every community is different. So say the average income in one community is $50,000 a year, but you make $100,000 a year. Then you're going to be like a non-priority NACA person, and they're going to make you move to like revitalization areas. Like, okay, you can still use NACA, but you can't move wherever you want to move. They may have you move to more like, we are looking for people to move to these areas to revitalize these areas. So that could be a problem for some people, but NACA has their own agents as well. So, or they're NACA approved agents where they've taken a class and they're NACA certified, that sort of thing. And so they can help you find a house. But Bank of America, when you are closing a loan with NACA, it's a Bank of America conventional loan with no mortgage insurance, no PMI, no down payment, no closing costs. Anything else you want to add? Like, what made you even think about doing NACA?
The interest rates.
Right.
They were so much lower than a conventional loan, and the no down payment. Our area, where I live, the income is not high anyway. Like, we don't have a mall, we don't have a Target here. So I know that's crazy to some people.
Right.
Yeah, with the interest rates being so low, and you could still buy down your interest rates if you wanted to, and just the no down payment, it was like a win-win situation.
And a lot of people that do NACA, because they're saving the money with no down payment, no closing costs, they use that money that they do have to buy down that rate. So yeah. All right, I don't want to hold Sheena. We're gonna go to Sheena's YouTube channel. Y'all watch this. That's the after party, y'all. So the after party is watching Sheena's videos. Again, she has videos detailing her whole, like, how many denials did you get? Say that again.
I mean, we up there.
Right, it was at least 3. You
Oh,
got 3 people. Quicken said no. Navy Federal said no. Somebody else said no. You had 3.
mortgage broker, the local.
Mortgage broker said no. She had 3 loan denials, but was still able to buy a house. She details that on there. She also has DIY videos showing you what she's doing with her home and how she's updating it and really making it her own. So yeah, Curly B says, on my way there right now. All right. So thank you guys. Thank you, Sheena. Anything else you want to say?
That's it. Thank you so much for having me.
Thank you for staying extra. I appreciate it. Y'all have a good night and happy Black History Month. This is my last live of Black History Month, you guys. Oh, you guys, people are trying to call me. Sheena, well, hold on one second, y'all. What county? You're in Georgia. What county? I know it's America's Georgia, but what county are you in?
Sumter.
Sumter. All right, you guys. Bye. Good night.